Close your eyes for a second. Imagine your life as a movie, and every decision you've ever made with money is on the screen. Each swipe, each payment, each delay, playing back in real time. Now imagine a voice whispering, "This isn't about what you have, it's about what you honor." Welcome to Epic Spotlight. I'm Dante Royster. Make sure you give this a like and share this with friends and family, because we're pulling back the curtain on credit. Because most people treat credit scores like it's a mystery box. But here's the breakdown: 35% is based upon your payment history. This is your trust score. Every on time payment is like showing up to work early, it builds your reputation. 30% of your credit, well, that's based on your credit utilization. That's your self control meter. If you're maxing out credit cards, the world thinks you're living on the edge. Keep your balances under 30%, ideally 10%, and you're doing a great job. 15% of your credit is based on credit age. Like fine wine, older credit gets better. The longer you've had your accounts open and active, the more stable you look. 10% of your credit is based on new credit. Each time you apply for new credit, it's a soft whisper to the world: I need more. Too much too fast, though, it looks risky. Another 10% is based on credit mix, a healthy blend of credit cards, car loans, maybe a student loan or a mortgage, knows you can handle a variety of things. Remember, your credit score is basically your financial GPA, from 300 to 850. And here's the truth: you don't need a perfect 850 to win. However, anything above 760, well, you're playing in the major leagues. Now that's credit for you, not cash, not clout. Credit is the world's way of asking, can I trust you when nobody's watching? And starting November 17th, 2025, that question is getting an upgrade because Fannie Mae just announced a shift, a quiet but monumental move that's about to reshape how millions of people are judged financially. It's called Vantage 4.0. And trust me, this is the new language of trust. Now, let me stop right here and just tell you a quick story about a man named Jim. Jim tried to rent an apartment. He had cash in hand, first month, last month, and even a little extra for good faith. The landlord looked at his application and smiled politely and said, "I'll get back to you." 2 days later, the message came: "We decided to go with another applicant." Now, here's the kicker: the other applicant had half the income, no savings, but a 750 credit score. And that right there, my friends, really made me realize something about how powerful credit is in America. Your credit score is your adult report card, and everybody wants a peek at it. Now, credit isn't money, it's memory. It's the digital diary of how you handle responsibility. Every time you borrow, pay, delay, or overextend, that data doesn't disappear, it compounds into a story. Until now, that story's been told mostly through FICO, the old school narrator of your financial life. But Fannie Mae's new direction signals something huge, something different. We're stepping into a world where your credit history isn't judged by a snapshot, but a storyline. So here's what's happening. Fannie Mae announced they'll begin including Vantage 4.0 in their disclosures, a prelude to eventually accepting it in their lending system. The tech integration is still underway, and the GSEs haven't yet updated their selling or servicing guidelines. But what we do know is this: they'll soon start accepting either the classic FICO or the new Vantage 4.0. Never both, never mix. That means loan originators, like me, will soon be looking at both models and deciding which one serves our customers better. And that, my friends, could be a game changer for access to home ownership. Credit's funny. It's like dating: slow to trust, quick to judge. At first, it gives you a $300 limit and says, prove yourself. You show up on time, you act responsible, and suddenly, would you like $5,000? But if you miss one payment, boom, you're ghosted for 7 years. You can write letters, beg for forgiveness, but that report still is singing the blues about your mistake. It's brutal, but it's also fair because it rewards the one thing that separates people, and that's consistency. Vantage 4.0 brings empathy to the equation. It doesn't punish as harshly. It understands context. It only needs 1 month of history to generate a score, while FICO needs 6 months. It ignores all paid collections. not just medical ones. It even ignores unpaid medical collections too. Something FICO still factors in to their equation when it's over $500. And here's another thing. Vantage includes alternative credit like rent, utilities, even consistent streaming payments. You're not just judged by what you've borrowed, you're actually judged by how you live. This could open the door to millions who've played by the rules but stayed invisible. People who pay their bills, their rent, their lights, yet get no credit for it. That's about to change. And when that happens, homeownership won't just be for the credit elite, it'll be for the financially responsible, the ones who build good habits even when the system wasn't watching. When it comes to buying a home, your credit score is your silent negotiator. It's the invisible voice in the lender's ear saying, this person's good for it. A higher score doesn't just give you approval, it gets you better pricing. Lower interest, lower fees, less stress. And with Vantage 4.0, that story may finally sound more fair, more human, more forgiving to those building from humble beginnings. Now, let's get real for a second. Credit isn't just math, it's emotion. It's that sting of rejection when you're told, sorry, your application didn't go through. It's that small victory dance when you finally get approved for that first card, that first car loan, or that mortgage. Credit teaches discipline. It's like going to the gym. You don't see muscles right away, but one day you wake up and you realize you've built something. This isn't just about loans, it's about access. It's about rewriting what qualified looks like in America. Because if this new scoring model does what it promises, and I hope it does, we might finally see more first time buyers getting a shot. Not because they're perfect, but because they're proving themselves. And that's the heart of credit, and that's the heartbeat of the American dream. So here's your next move: pull your credit report, study your story, and ask yourself, am I building trust or just using it? If your score is low, don't panic. Start small, stay consistent, because as of November 17th, 2025, a new chapter begins. And this time, the system's ready to listen to your full story and not just the snapshot. Your credit is your character, your payments are your promises, and the life you want, well, it's just waiting for the proof that you mean it. Now go write your story, one payment, one promise, 1 month at a time. And if you need my assistance, my contact information is right over here. Because in this new era of credit, the world's watching how you rise. And as always, have an epic day.